Following financial data are available for P.Q. Limited for the year ended. 8% debentures of 125 lakhs, 10% bond 50 lakhs, equity share of 100 lakhs, reserves and surplus 300 lakhs, total asset 600 lakhs, asset turnover ratio 1.10. Effective interest rate, it is 8%. Highlight that information. Income tax rate is 40%. Operating margin is 10%. That is earning before interest and taxes upon sales into 100. Why the word operating information is given to us. Dividend payout ratio, that is 1 minus V, 16.67%, that is 1 divided by 6. Current market price of equity share P0 is given to us as 14. Cost of capital is given to us as 15%. First question is draw income statement for the year, and so on. The question is provided to us. Everybody is requested to go through the question, please. Now friends, over here the first part of the question says that you are required to draw income statement for the year. Everybody is requested to pay attention. You have been provided with the assets. You have been provided with the asset turnover ratio. With this information we can compute the sales. Then you have been provided with the operating profit margin. You can compute the EBIT. Then for the purpose of interest calculation, information is given. We'll find EBT. Tax rate is given, EAT. No preference dividend, so earning after taxes itself is the earning available to equity shareholders. From that, a certain portion of the earning will be distributed in form of dividend, and the remaining will be the retained earning. That kind of small statement is required to be prepared. Please write down answer along with me. Working note number 1. Calculation of sales. Friends, we have understood or we have learnt a formula called asset turnover ratio. As far as the asset turnover ratio is concerned, it is calculated as sales upon assets. So we understand that the sales is equal to assets into asset turnover ratio. Asset value is given to us in the question, an amount of 600 lakhs, and asset turnover ratio is 1.1. That comes to an amount of 660 lakhs. That is the sales value provided to us in the example. Working note number 2. Calculation of operating income. Let us see how to make the calculation of operating income. We understand that the operating profit in percentage term is EBIT upon sales into 100. So as far as EBIT is concerned, it is sales into operating profit in percentage term. So this is an amount of 660 lakhs into 10%, because this is provided to us as 10%. So that comes to an amount of rupees 66 lakhs. Now we can prepare the income statement. In income statement we can calculate with the EBIT. less interest. So EBIT minus interest is EBT. Minus tax is EAT. No dividend information, sorry, no preferential capital information is given. So EAT itself is earning available to equity shareholders. Less equity dividend. So certain portion of the earning will be paid in form of dividend, and the remaining is the retained earning. That is what we understand. So the EBIT value is given to us an amount of 66 lakhs. The amount of the interest, it is 125 lakhs and 50 lakhs. Importantly, the information is given to us as effective rate of interest of 8%. So over here, 125 lakhs plus 50 lakhs into 8%. That is the way we are required to compute the interest amount. So we'll compute the interest like this: 125 plus 50, that is 175 lakhs into 8%, that comes to 14 lakhs. It is deducted from 66 lakhs. So profit before taxes is 52 lakhs. What is income tax rate? Income tax rate is provided to us as 40%. So earning after taxes is 60%. That is 31,20,000. Then information is provided to us. Let's say you pay dividend 1/6. So equity dividend is 1/6. That is 5,20,000. Remaining is the amount of the retained earnings. So 31.2 minus 5.2. That comes to an amount of 26 lakhs. Please write down answer. B part of the question. Calculate its sustainable growth rate. So second part of the question, in which we are required to find the growth rate. Friends, growth rate is calculated as B into R. B stands for retention ratio and R stands for the rate of earning. See, the payment of the dividend is 1/6. So the retained earning is 5/6. Now the only thing that we are required to find is the rate of earning. So we understand like this. Working note number 1. Calculation of rate of earning of the company. Let us see how to calculate it. It is earning after taxes divided by net worth, multiplying with 100. Okay. We can see that the equity share capital is 100 lakhs. Reserves and surplus is 300 lakhs. So this is 100 lakhs. This is 300 lakhs. And the numerator is the earning after taxes. Again, we already have found it. It is an amount of 31,20,000. So what will happen, friends? The numerator is 31,20,000. In the division, we have 400 lakhs into 100. That will give us the rate of earning. Once we find the rate of earning, then later on we'll compute the growth rate as B into R. So we understand that it is 31,20,000 divided by 400 lakhs into 100. That comes to 7.8 percentage. Now calculation of growth rate. It will be found as B into R. B is calculated as 1 minus 1 divided by 6. Okay, because dividend payout ratio is 1 by 6, so the retention ratio is 5 by 6 into 7.8 percentage. So 5 divided by 6 into 7.8 percentage. That comes to 6.5 percentage. That is the way the growth rate is supposed to be found. Third question. Calculate the fair price of the company's share using dividend discount model approach. So we are required to make the computation of the price of the security using dividend discount model approach. You can see that we already have found the dividend. We already have found the cost of capital, growth rate. Cost of capital is given to us in the question. So with that, we can make the calculation of the P0 using the dividend discount model approach. So answer of the third question, in that working note number 1, calculation of dividend per share. The amount of the equity dividend is given to us. That is an amount of 5,20,000. Number of equity shares, 100 lakhs divided by 10. That comes to 10 lakhs. This will give us dividend per share. 5,20,000 divided by 10 lakhs. That gives us dividend of 0.52. Then we understand and say P0 is equal to D1 divided by K minus C. That is a simple formula to be applied. Since the information is provided to us about the current year, so this dividend is supposed to be understood as D0. So 0.52 into 1.078, because 1.065. That is the way the D1 will be found. Divided by cost of capital 15% less 0.065. With that, we will make the calculation of P0. So 0.52 into 1.065. So 0.5538 divided by cost of equity capital minus growth rate. So 0.15 less 0.065. So it is 8.5%. So over here 0.5538 divided by 8.5%. That is 6.5152. So let us take rupees 6.52. That is the equilibrium price of the security. Last question. What is your opinion on investment in the company's shares at current price? We understand that the current market price of the equity share is very high. It is 14 rupees. We understand that the price should be only 6.52. Since the price is substantially more than what it should have been, So investor is advised not to buy the security. Let us answer for the fourth question. Investor is advised not to purchase the security, because actual price is more than equilibrium price. In bracket write down 6.52 is less than rupees 14. Bracket over. Friends, in my opinion, the only important point in this question is calculation of the interest at the rate of 8%. Why? Because the question is providing the effective rate of interest information. Rest working are exactly the same thing, that we already have done it for number of times earlier. So just be careful that say how to make the calculation of the interest amount if effective rate of interest is given.